very strong position. Again, asset quality best we've seen in a very long time. So coming in to the conflict, we're very much in a position of strength.
What are the main avenues of risk to the banks the longer the war persists? What are you watching out for?
Yeah, no, very good question. I mean, look, our base case is still predicated on a relatively short regional conflict. And under that scenario, the banks face few immediate credit risks. The starting point for us, at least, is out of the nearly 60 GCC banks that we rate, over 85% of those driven by sovereign support. And we believe that GCC sovereigns generally have sufficient headroom to withstand a short regional conflict. But, we've got to see whether anything, escalates significantly. Certainly, a short regional conflict, the headroom is there. And for instance, Qatar was affirmed on Friday at AA stable.
Can I just
Okay, welcome back to Monday's session here. We are at the opening, almost lunchtime. I'm targeting the lows here, but we might not get there because of the swings, heavy swing. Yeah, not get there. We'll see how this bull candle reacts inside. Let's get another entry. Get another entry there. But I'm targeting the gap down here, at least the lows today. Just got a nice 1% profit on this trade. Swing up to take some liquidity here before it was a liquidity grab. It ended up becoming that before rotating back down, and now we want to short. I missed this value. This was the nice premium sell here, probably the best one here at POC, and then another one here at value area, another value here. Looks like now it's ready to go. Yep, we should have held that one because now I just took the lows. I'm still expecting this to continue down here. I mean, not much signs of any bulls. No buyers here. Could have re-entered here. I'm not sure if it will come back to value or not. I don't doubt it. Although this wick here.
ask you to define what you mean by short? Well, it's been going on for 2 weeks now. It's all, let's say the war ends in a month, so another 2 weeks. Does that fit your time period?
Our time frame, our base case was based on about 4 weeks to start, and obviously, as you said, we're now a couple in. It looks at lots of different things, escalation, particular sort of damage to major infrastructure and things like that we've seen, that we haven't seen so far. I mean, for banks, we need to sort of drill in more into sort of their standalone credit worthiness to see how they're positioned. And you kind of mentioned it.
So now that we've taken this liquidity sell side here, This could easily rotate back up with that liquidity grab. Now we just have to wait to see what price does in value level here. Does it want to go back to value, or is it really seeking gap fill for today? Because right now we're still looking bearish.
The beginning that we're coming into this with sort of sound financial metrics. I saw you put one of the charts up. I mean, capital buffers for those four major markets range from 13 to 15.5. So again, very strong position that gives pretty good buffer.
Yeah, heavy sell volume in this area. Let's see if buyers can take this level back and swing back up here, or sellers protect this, and then we just come back down for the rest of the day.
Yeah. And when you talk about,
We are good today because we got profits on this trade, and we broke even on this one, so we're still good for today.
future operating conditions, what do you think is going to be more impactful for the trajectory of BTC banks? The extent of oil growth or non-oil growth? As we've been covering extensively over the last few years, while these economies continue with their transformation plans.
Yeah, I mean, for us, what's really driving the Gulf banking systems is kind of the non-oil growth. That is what is really driving what we've seen as really strong loan growth over the last few years. So that is kind of the key to watch here, is what's going to happen to the non-oil growth. The other key sort of what to watch really is confidence in the region. I mean, it's been very, very strong, but that can really change the trajectory.
Now let's look at the delta. Let's look at the delta range. We got a gap opening, and then right after the initial balance is set, a gap down. And look at that, we're in a negative delta now. So let's see if these aggressive sellers, are they going to get absorbed, or are we going to stay bearish? That's what we're waiting here for, because this could easily come back down. If delta comes back and fill this gap here, there's a gap there. Or if the buyers show up, if they come back, they want to get aggressive, we can come back to target this gap. Which gap fill are we going to hit towards? That's our range today. But right now we are negative delta. I mean, this is,
if you start to see sort of paths, leaving, or less resilience in terms of the retail market or in the real estate market. But going back to your question, it's kind of non-oil growth. What we're expecting now is lower loan growth, and obviously financial metrics of the banks will be slightly down. But again, that's still predicated on our relatively short-term base case.
Yeah, and one other question, still early days, to your point, it's difficult to assess, but one of the booming sectors, especially here in Dubai, has been real estate. And I wonder whether at some point the market is going to have to account for a potential slowdown in real estate. I'm not saying that it's happening right now, but the longer this war persists, then you'll likely get some knock-on effect there and potentially asset quality downgrades to follow as well.
Yeah, I would agree with you if this stuff becomes sort of a longer term thing. As I mentioned, we're going into this crisis, this conflict with asset quality for the banks, in a very strong position. We've got asset quality ratios. So I'm talking about non-performing loan ratios of sort of between 1.5% and 3.5%. We've got coverage for the whole region over 100% and all the way up to 250% for Kuwait. So again, we are in a very strong position, and the buffers have been quite good to be able to withstand deterioration. But you're right, real estate is probably one of the key areas that could see some deterioration. And again, as you said, particularly, Dubai, UAE in general. Again, we're too, we're not close enough yet to know that. I mean, we've been predicting a real estate correction. That's still on the cards. And the correction that we're predicting was still absolutely manageable for the banks. I mean, if you look at the real estate exposure for the banks, it's been coming down. And as I mentioned, provisioning is very strong. So we're still not anywhere near that yet for the banks. We still think those liquidity buffers, those capital buffers, the place that the banks are in terms of asset quality, gives them, a reasonable amount of time.
Yeah.
And certainly we're not expecting at this stage any pressure on those viability ratings for the banks.
Redmond, thank you so much for getting up early to chat with us. Redmond Ramsdale, head of Middle East Bank Ratings at Islamic Banking at Fifth Rating. For more of these stories, looking into the intersection of wealth and power in the region, sign up for our Middle East Money newsletter on Bloomberg.com. Coming up, the China's economy shows signs of a rebound, even as global risks rise. We'll break down the latest data next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. China's economy is showing signs of resilience at the start of the year. Industrial production and retail sales both came in stronger than expected, and a sign that momentum was improving before the war in Iran roiled the outlook for global growth and inflation. For more, we're joined by Bloomberg's Phil Deepus. Phil, let's start with the data. And of course, it is important to just remind everybody that this is the data that was snapshotted before the war started. But how significant is the rebound in industrial outputs and in retail sales?
Yes, that's right, Simona. So again, before the war started, but ultimately you did see a pretty surprising uptick there. I think the retail sales figures being stronger than expected, certainly a welcome sign for this economy, given how much they've been under pressure on the consumption front over the past couple of years. I think those industrial production figures probably, sort of the sign of just how well they've been faring as an export machine. And again, I think that's really, sort of the question going forward when you try to consider how the war is ultimately going to impact this economy. One other number I want to highlight, we did see an uptick in fixed asset investment, which is pretty surprising given the contracted for all 2025. So seeing that improvement there does make you kind of wonder whether or not we were going to see any kind of stimulus rolling out in China particularly over the next couple of months, maybe sort of, delay, some changes in rates there, just because those numbers are pretty strong. Now, all that being said, we'll have to look to see how exactly the conflict does weigh on the economy going forward. China is, sort of more insulated to oil shocks than some other nations, particularly in Asia. But, at the end of the day, this is a global conflict that doesn't really seem to have, signs of an end here. So we'll have to see how that sort of plays into the figures going forward.
Yeah, and it's funny because the war, I know that it's funny, but it's also overshadowed some of the talks that were taking place on trade. Really important discussions happening between US and China in Paris right now. How important are those discussions, and what are some of the key issues that both sides are still trying to resolve ahead of the future anticipated summit between Trump and Xi?
Yes, that's right. I mean, look, I think, there's plenty of things that are at issue here, not the least of which are, things like rare earth materials and stuff like that. But I mean, these talks in Paris do also come at, it's kind of a complicated time here when you consider that Trump has kind of threatened to call off the meeting with Xi because he's trying to get China on board with this plan to send warships into the Strait of Hormuz to protect output there. I mean, that's something that China really isn't, going to be particularly inclined to participate with. I think, at this point, there's really that question of whether that Trump Xi meeting goes ahead at all, or, if it's delayed maybe toward the end of April or such, just because the conflict in Iran is, such a huge cloud kind of hanging over that U.S.-China relationship right now, particularly when you've got Trump telling other news outlets, that, he'd be willing to call that off. So I do think that kind of, has to enter the calculus for discussions between these trade representatives in Paris this week.
Thank you so much for giving us the latest on China, both the economic data that was released and those negotiations with the US and Paris. Now, for a look at some of the other stories we're following today, Ghana has reduced the levy charged on gold mining to ease the financial burden on producers who face increased payments under the country's new royalty system. The so-called Growth and Sustainability Levy has been cut to 1% of gross production as Africa's leading gold producer moves to a new sliding scale royalty structure tied to global prices.
Chevy trucks are stupendous as the Chevy keeps the drive. I don't need permission to get going. Don't have that little extra.
At Queen City Home Store, we have everything you need for every room in your home, from appliances and electronics.
Was Biden following disputed elections in January. Bobby Wine, in a post on X, said he was making a brief trip abroad to handle what he called important work. The singer-turned-politician had rejected the election results, which gave longtime President Yoweri Museveni a landslide victory, alleging widespread fraud. And Rwanda has signaled it could withdraw troops from northern Mozambique, where they played a central role in securing the Cabo Delgado region. With the EU funding for the deployment set to expire and new US sanctions on Rwanda's defense forces, the future of that security presence is now in question. A withdrawal would pose major security risks for the region, where companies like Total and Exxon are planning major natural gas investments. The war in the Persian Gulf has caused an energy emergency in Asia, with billions of people dealing with gas outages and preparing for fuel rationing. The energy crisis is having a global impact, with prices spiking. The IEA believes it is creating the largest supply disruption in the history of the global oil market. Joining me now to talk more about today's big take is Bloomberg's Alicia Sachdev. Alicia, quite simply, what does this war mean for everyday consumers right now?
What's most striking about this conflict is how quickly it's starting to show up in everyday life. For example, in India, a restaurant chain based in the south of India that I spoke to, and this is a chain that has been around for 60 years, said that it's already cutting menu items, and it's not something it's had to do ever in its history. It's telling diners that they have to return because the staples on its menu are simply not there because of the lack of cooking gas. Some diners are also literally walking out because they just don't find in restaurants what they've come looking for. Again, it's not just restaurants. Wedding guests who book wedding venues are not able to serve their guests the entire menu that their caterers promised them. Again, for the lack of supply of LPG. Invest in India, a company that I spoke to, which is involved in the business.
Broke even again.
Using
We thought we could
for telecom
put
towers,
this down, but
uses
we're still stuck in this range between the POC and the value low.
That's off. The factory, which employs about 900 people, will also have to shut off for about a week. So that's really the extent of the impact we're looking at. It's hitting real people. It's impacting kitchens, farms, factories, what you will.
We could come down from here because of this bull candle taken out these bears
Size.
protected at this level. I mean,
And also, I
a
mean,
lot of activity here protected, sellers dropped it back. Manipulation on this, probably come back down.
Depends heavily if you're coming out of the Gulf, and most of that supply
For the day, 2 break evens here, kind of short. One by one.
conflict.
Take profit.
Take India again, for example, 90% of the LPG supply that India relies on comes from the Middle East. The alternative supplies that may come from the US, for instance, will take at least 40 days to arrive. It's a lot more, which is why we're seeing
Peace.
that spread across restaurants, industrial use cases.